I made $54,000 in the past 2 months using a very high win rate strategy. And in this video, I'm going to show you exactly how to do the same so you can find these trades before they happen. Okay, so step one, what you're going to want to do is head over to a free tool called Market Chameleon. Okay, you can type it in Google. You're going to see the first link here, marketchameleon.com. Once you're on this site, you're going to want to head over to the options portion here. And then you see the second thing right here. This is implied volatility rankings. You're going to click that. You're going to see all the options with the highest IV rankings here, okay? You can look right here in this middle section called volatility. You can see all the volume, open interest, all this kind of stuff. IV or current IV 30 is kind of the IV rank. That's typically what you want to look at, or the change percentage as well. That's going to give you a list. All the ones on here have extremely high volatility. And if I just look at, for example, GSIT, if I just pull that up on a chart, you're going to see they're all going to have a very extreme move. So GSIT, we go to REPL, just like that. And you're going to see these have very high, strong moves. Now, we're going to be trading the options here. I'm going to show you exactly how to do that. So let's say, for example, we want to look at ones that have higher price stock, better for options market in my experience. So CELC, right, the $72 stock, a little bit better. Very strong, high EV. Let's go ahead and take a look at the actual stock itself. And there we go, right? So you can see that we're jumping up extremely high. We could even look at other ones on the actual chart itself. So BETR is another one, right? This would be another good one to look at. This is another we can look at. You can see how typically this one's at $10 to $20. We had a huge, massive move about a month ago. Then we consolidated for another month, and now we're having a huge, massive move higher as well, okay? So how exactly do I want to trade this, and how do I get these huge, extremely high win rates? Well, the thing with IV and this stock, so BETR, if we pull up, quick interruption guys, go ahead, just hit this little subscribe button down here. I've been trading 8 years and I'm putting everything, all the insights, tools, strategies, tips that I know and I've learned in this channel with new videos every single week. So go ahead, subscribe, back to the video. If we pull up BETR on the options chain, and this is a platform called Tasty Trade. This is a brokerage account that you can trade options on. This is one of my accounts. Now what you can do is you can see the IV over here. You see 140%. For the closest one out, which we have, which is 32 days. So it looks like we just passed the most recent options expiration. So 32 days out is the closest one. You can see all the options chains here. And so if we look at BETR right now, we're sitting at a price of $83, okay? Now this one was very much consolidating in between this kind of 65 and 55-ish zone, and now we're ripping a lot higher. Now, because we're ripping really high and because the IV is really high, all of these options, these call options, are extremely inflated, okay? You can see IV, implied volatility, 150%, which means these options simply just cost more money. They're simply more expensive, which means it's advantageous for us to sell them or short these options by putting on spreads. Again, when the market is ripping higher, what do you want to do? Well, when markets are expensive, you want to sell. And when markets are considered cheap, that's when you want to buy, right? Same thing with the options market. So we see that we obviously have extremely high IV. We want to sell a spread and bet that the price is going to stay either neutral or head lower, okay? And again, this really doesn't even involve much technical analysis. Simply looking at the volatility, implied volatility, and using options to your advantage, right? So let's say we're at 83 right now, okay? We have a nice resistance up here towards 95 or 94. And we just believe that this was a huge run up. Something like last time we spike higher, we come back down, consolidate. We believe that's going to happen again. So we look at the options chain. We say, okay, we have nice resistance at 95. We don't believe price is going to be there. Or maybe we believe that price could spike a little bit higher, but eventually head a lot lower, or just stay neutral, and these options are going to decrease anyways because of the high IV. So what we can do is put in a trade. Let's say we have the 95 strike price, because again, we believe that we want to give ourselves a little bit of an advantage here, right? And say, okay, if we sell these 95 calls right here, okay, we are basically saying, okay, as long as price stays below 95, which right now is an 11% move, so in the next 30 days, as long as price stays or doesn't move higher than 10% and go down, it can stay neutral, flat, doesn't matter, we are going to profit on this trade, okay? And so what you can do is you can sell that. You can sell the 90, excuse me, let me rephrase this. Let me go back and clear this out here. What we actually want to do is sell the 90s and then buy the 95s as protection, okay? Because there's no other strikes after the 95. So we're going to go ahead and short the 90s. We're going to buy the 95s as protection. That's going to set us up on a spread, okay? And if we look at the analysis, our max profit is $250. Our max loss is $250. But our probability of profit is 66%, okay? That's huge. That's a massive edge. This is basically like flipping a coin. If I said you flip a coin, heads or tails, heads you make 250, tails you lose 250, you would say, well, heads or tails is a 50% chance of happening. But with this trade, we have a 66% chance of winning. That is our edge. And that's how we can catch these crazy moves. Now, this is not a 90% move. Okay, I can show you one in a second. However, this is still an incredible edge. And we're able to do this because of the high IV. And the way this trade will work out is that as long as price stays below this $90 price point, right, the option here that we shorted, we are going to come out with that max profit. We are going to make that $250. Now, here's a really neat, interesting thing. You don't have to wait for this to expire in 32 days to profit off this, okay? In fact, because the IV is super high, as this gets close to expiration, these options are going to dwindle down in price. You can see right now it's about $14, $13 for this 90 call. As time goes on, IV is going to naturally deflate, the options are going to deflate, and these are going to decrease in value. So right now it's 250. We can get filled at this for, what can we get filled at this for? About, 250. This will probably go down to like 240, 230 just tomorrow alone, simply if price stays where it's at or heads lower, right? And so what we can do is we can scalp this, take these profits, and really capitalize on this actual market. Now, if you want to find more of a much higher win rate one, that one was obviously 66%. We can take another example, something like CLF, right? If we go down and we look at CLF, this one had another massive move higher, really nice move. We go over to the options chain on CLF, like so. We have one that's 4 days out, okay? And now we have a little bit better chance of making money, right? So we can say, okay, this thing went a lot higher. We're coming up towards resistance, right? If we look at something like the 17.5 versus the 18, and if we were to short that and do a nice little spread, you can see this one, probability of profit is 88%. Now, obviously, the risk reward isn't as good, right? You're risking $46 to make $4 on this trade. But again, for you to lose money on this trade, you need price to go and close above 17.5 right here in the next 4 days, which is extremely unrealistic for this type of stock. I mean, you're looking at this stock that needs to move about 12%. The stock needs to move 12% in 4 days just for you to lose money on this trade. So you can create these massive opportunities by doing this. And also by taking advantage of the actual IV. Again, you don't have to wait till the end of the 4 days. I'm sure tomorrow, when tomorrow comes around, as long as price stays around where it is, even if it goes up a little bit, this is probably going to be worth a little bit less, and you can actually profit off of that move. So very, very simply, by finding these high IV moves with Market Chameleon, picking these stocks, finding your risk rewards, and setting up these trades or these credit spreads on, doesn't have to be this broker, but any broker, you can capitalize on these moves and make a lot of profit.